Hey, this is Sasha Evdokov, founder of TradersFly, and today what I'd like to do is take a look at investing in IPOs. Now, investing in IPOs or initial public offerings is very fashionable. It's hype. It's things that we are attracted to because they're modern companies. They're on the news, and there's a lot of that shiny object attractiveness to it because it could be the next Google, it could be the next Facebook, it could be the next Microsoft. And as those companies increase in the future, increase their value, you're able to capture a piece of that investment and make more money from it. So let's take a look at some IPOs, and I'm going to share with you my own personal insights and wisdom about trading or investing in IPOs, and maybe it'll give you another perspective. So whether I decide to do it or not is irrelevant. What's important is that you see it from another perspective so that way you can get some insights. So I'll share with you those insights, and then you can make your own decision. So first things first, let's take a look at some IPO basics. So if you have no clue what an IPO is, it's basically an initial public offering, which means you get to capitalize or are able to purchase some stock early on when that company is new to the public market. Basically, you can't buy shares or you can't buy a piece of a company if it's a private company, but if it's an IPO or it's public, then you're able to get a little piece of that company before it gets to, let's say, stage 10 as far as profitability goes. If it's just starting at level 1, then you're able to get it at level 1 or 2 rather than waiting until it's already a mature company. So that's really what an IPO is you're able to get in on the ground floor before that company has a chance to mature, allowing you to capitalize on that growth from the beginning. So companies do an IPO in order to raise money rather than buying it or getting a loan from a bank, rather than paying the bank a percentage or that interest rate. Instead, what they do is give off a little piece or shares of their company in order to get money from investors like yourself or other people, and then they can use that money to grow their business. So it's a way to gather money and continue to grow the company. Now, there are significant legal costs when it comes to doing an IPO. There's just a lot of banking that's involved. There's also a lot of increased reporting time and attention that has to be involved because now you have reports that you have to do all the time, annual reports, quarterly reports. There's just a financial mess and nightmare in order to really do it. But of course, it's much more worthwhile than paying a bank a percentage or interest rates. Now, in general, I'll give it to you straight, most IPOs are horrible investments, most of them. Not all of them, but the majority of the ones that I get asked about are horrible investments, and that is just the nature of just the overall market. And I'll give you some insights here towards the end of this video and let you know exactly why. So what's the big problem with most IPOs? Well, they are new and they're attempting to find their footing at the next level. So what happens ultimately is that if you have a company, let's just say a one-person solopreneur online, you're just a blogger, you're starting out right here, level 1, okay? Now you get your groove, you find your way of building a business. But then as you get to level 2, level 3, when you get 10 people, the company starts to change, right? You have to deal with employees, you have to deal with management, there's a hierarchy that starts to create and develop. So you're moving from one person to 10 people, things are changing. Now, when you go from 10 to 100 people, again, things change. And there's a whole new footing that you have to figure out. You have to figure out even more management tasks, keeping employees on board, the HR department. So there's these different steps and levels. When you get beyond a certain number of people and you decide, okay, hey, well, I want to grow the company, and let's just say you decide to do an IPO, you want to do a public offering, you're going to another level. So think of it this way. You're jumping again from, as easy an example as I could tell you, from 100 people, let's just say 500 people for conversation's sake. Now again, you have to juggle and figure things out because this company is just growing that much bigger. Now, when you go into an IPO, you're not necessarily jumping in the quantity of employees that are working for you, but there's a lot of new tasks that need to be done. There's a lot of new headaches that will come when you do an IPO. And you need to figure those things out. And it's kind of like a deer trying to stand up for the first time, or a giraffe or a camel. the wobbly leg syndrome is what happens. And when it comes to an IPO, same thing happens, is that you're just trying to find your footing because you're going to that next stage and level. So the growth of the company is really on shaky grounds as you're moving into an IPO situation or getting to that next level. So you need to be a little more careful. Now, the enthusiasm, of course, hey, this company is great. The enthusiasm, of course, does push those stocks initially sometimes to extreme valuations and higher prices. And if you're able to get in at the right time and take profits at the right time, you can definitely capitalize and make a great deal of money if your timing is correct. But that doesn't happen to every IPO or every single company. So let's take a look at some recent IPOs and evaluate how they've done in the past, or how you should be looking at investing in an IPO. So here's a fairly popular company as we take a look at GoPro. This, by the way, is the TC2000 platform. You can get it on my website with a discount. So if you go to tradersfly.com and take a look at the resources page, the software is listed and there's a discount coupon code for using our link there in the on the website. But with that being said, looking at this IPO, you can see right now we are currently at the $7.80 price point. And when you look at the IPO, the initial public offering over here, here's where this stock price really was. You kind of started out around the $40 price range, $30, $35, $40 price range. And then you had this stock heading a little bit higher, and then the rest of the time it just continued to sell off completely. So if you look at here kind of a 2-day chart run up, and we go back to this IPO, you pretty much had about a week or two, a couple months actually, to get into that stock right before that initial breakout. Then you had this ABCD pattern right there that was created before it hit that $95 price level and started its sell-off, right? So here, looking at this stock, you had an initial consolidation, move sideways, you had a breakout, okay? You had a slight pullback, the B2C pattern, and then another range higher, and then until finally the emotions, the energy died down, and this stock now continued to move lower and lower and lower. So you can see that happening as we go into the weekly chart, and you can see this stock was just basically toast after it hit its peak. And most of these stocks, once they get in the gutter, it's so tough for them to get out. Even though I love the GoPro, the products that they release, unfortunately, when you're a public company, investors want growth on their money. What's going to happen next? And remember, when you're at a grocery store, what are the top 10% of the foods that you want to buy? Whether it's the top 10 most tasty foods, or the top 10% most healthiest foods, or the top 10 most discounted foods. Here, if you look at it, is it the most tasty? Is it the most discounted? Is it, does it have the highest growth potential? So more than likely, I mean, you're looking at it as a cheaper stock, but remember, even chicken eventually goes bad. So here, in this case, some of these things take a while to get out of that gutter to go to higher prices. And even then, you'll have resistance there. And you can see already 1.5 years, it's been moving sideways. Here's another recent IPO. This one was a little more recent. Here is Snap. Okay, so if you take a look, here we are on the Snapchat IPO, right? So amazing IPO, right? That's what the big hype was. Phenomenal stock. Get in this stock, buy this stock, right? So that way I can dump my shares to you and I can make the money and you'll lose the money, right? See how that works? That's how the business works. There's a lot of hype. That's what the news is all about. So here's what happens. Boom, get in that stock, right? A lot of people getting in this stock. And then what happens? Well, the earlier people that got in it before the public offering, right? The ones that got in it in the company are dumping their shares, right? Remember, there's people that got in it before the public offering. There's investors in round A, round B, the seed rounds, when that company was even growing. They need to dump their shares somewhere, so they're going to dump it to you. And this is what happens, right? So here's the stock reaching some high points, and then all of a sudden you get this dump. You might get some more people saying, hey, it's a great value. Or if you're, in your 18s, 20-year-olds and you love the app, just because I love the app, or if you're using the app, doesn't mean it's a great investment, right? I mean, I like hammers to nail and hang up pictures. Doesn't mean I'm going to invest in hammers. It's not growing to the point of maybe a tech company or a Google or a Facebook or a Microsoft. I'd rather have more stability in my money. So here's the same thing. They come up right here and they sell off. Come up again, retest it. Again, resistance. It gets to that point where people are like, it's too far priced, right? You know, when you're buying chicken at the store, would you want to pay $75 a pound? Same thing here. You know, you don't want to overpay for that, for this investment. So that's what happens. People are dumping those things once they get overvalued, overpriced, once they get too far stretched. And again, this stock is now at 17 bucks, where the IPO was at 27, $10 discount if you were rooting for it at the beginning. So you can see this stock also has been moving lower. Take a look at Twilio over here, also another IPO, right? We had an IPO around 27 bucks, went up to this $66, sold off in a big way, moving a little sideways, broke under that $26 level, and now it's still trying to find its way somewhere under those $30 price point. So again, makes it very difficult. Look at Twitter, right? I mean, we use Twitter on when you go ahead and follow me on Twitter and those kinds of things for communication purposes. But right here, when you look at it, here's our IPO. Again, the same thing, you know, around 45 bucks. Comes into about $60, $70. It starts selling. And what do? We're creating lower highs on those prices. Now, eventually it can turn around, but it's just so much more difficult. Now, here's an exception. Take a look at Facebook, right? So let's go into the weekly chart. You can see here we had an IPO right here, okay, right around $40 a share. Stock sold off quite a bit right there, hung out right around that $30 a share, moved a bit sideways, and finally started to make some traction. And now this stock's around 152, and it continues to power higher. Investments keep coming in from 2014, 2015, 2016, 2017. It keeps stair-stepping higher, and in this case, this is working out. But in general, if you looked at some of the recent IPOs, they're not really working out too well. Look at Baba, okay? Here's another one, okay? IPO right around this range, 2015, around $95, okay? Stock sold off quite a bit. 2015, 2016 had this double bottom around $60. And then finally coming back into that IPO range almost 2 years later. And now finally showing some premise to going a little bit higher. And we're at the $138 level. So that acceleration continues to move well. But it still took a year to two. And this is one of the few. Take a look at Groupon, GRPN. So here, again, IPO, I remember this one, popular, $22 range, major sell-off, comes back 2013, 2014, struggled till 2016, and now it's under that $6 range. It's $3, right? So, you know, the site, a lot of people use the sites. I see those Groupon postings all the time from my Facebook friends, or those feeds that, you know, people share the links and then you get a discount if they buy it too. So I see those things happening as far as the consumer use goes. But as an investment, the growth, would I rather buy this versus another company? You know, where do you want to place your money? So again, you can see that when looking at IPOs, they're not necessarily the best investment right away. Even if an IPO will continue to move higher, when you take a look at like Alibaba right here, even then, it took 1 to 2 years for it to kind of digest. If you look at Facebook, again, 1 to 2 years right here from mid-2012 to about 2014. If you got in even right there, you didn't miss that much. Stock continues to move higher. But for a lot of people, what they want to do is they want to go in on this hype, this IPO hype. Hey, this is a brand new IPO. Get in it right now. Hey, let's look at this IPO. And the news channels love to pump this stuff up because with them, that's the hottest news, right? You're going to have this IPO. And what do you think of this IPO? And what do you think of the company? And they get these, people who are popular on these social networks, or they get people who are using the products, and they say, hey, well, you know, you're successful on this company or this product, or you're using it. What do you think of it? You know, do you see good growth potential? And of course they're going to say, yes, they do. simply because they're using it. They're using it as a business, and now they're going on TV, and the snowball effect starts happening. That's ultimately what happens with these IPOs, is we get sucked in to that shiny object syndrome. We get sucked in thinking this is a great company, when in fact, it might be better for you to invest in an underwear company than some high-tech flyer IPO, because it's more stable, because it matches your risk and reward style. It matches your risk tolerance better, okay? So don't just get attracted to that shiny object because it's a hot new IPO. Look at what the risk to reward is. Look at what the potential of it is. And are you paying? Are you paying $75 a pound for that chicken? You know, in certain cases, it may be worth it because it may be worth $150 in the future. But many IPOs, they get into that gutter and it's tough for them to get out. And if the IPO, if the company is really good, if it's a strong company, then you don't need to get in it on the first day, the first week, the first month, even the first 1 to 2 years. It takes that 1 to 2 years sometime to digest things. If you take a look at Tesla right here, where that IPO was, that digestion period was a 2 to 3 year period. And then finally it broke out around the $80 range, and now it's at the $372 range. So you don't have to be the first one in. You have time, okay? Most of the ones, the companies that are successful, you have time to get in them. If it's a high, quick flyer IPO, then you're probably just chasing the money, chasing the quick buck. And what I don't want you to get into is just constantly be chasing the money, because that's where you get into trouble. That's where you lose a lot of money, because those IPOs sometimes just go down and never come back up. Thanks for joining me in this week's video about IPOs. I hope you got a lot out of it. If you want to take a look at some of the more in-depth products or my premium video courses that I have available, go to my website at tradersfly.com. Take a look at some of the courses along with the books that I have written over the past few years and get some more insights about trading and investing. But if you want to join me on a live webinar class, which I typically do about once a month, then go ahead, click this button right here, enter your name and email address when you get there. You'll be put on the newsletter list, and that way you get all the news and announcements when I release new courses, classes, and then you can join me on a webinar. Thanks again, and in the end, remember, do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.